Hello and welcome. You're watching ET now. We're having a very special conversation with Mr. Gautam Singhania on how business is panning out, and from his vantage point, how is he assessing the next couple of quarters for Raymond. Mr. Singhania, thank you so much for your time. Let's start by understanding how business is panning out right now. We're just out of a festive season. What's the kind of operating capacity, if I may use that term, are you working on right now in terms of stores across the country? How does the situation stand?
So I think, we've had a tough period through the COVID from March, but coming out of COVID, pre-festive, we started picking up. And I think up to in November, it's been pretty good. There's been a recovery in the markets. And I think, different businesses are at a good, different rate of recovery. I think December has slightly slowed down, but that was expected due to the nature of our business in December. What is actually a problem we see is that, some of the wholesale markets were shut for much longer than they should have been, but now they are open. But things like the farmers' agitation in Delhi, which is now shutting down and disrupting a lot of that area, doesn't do good to anything. So we either have coronavirus or we have something or another. And this, even if it's a small disruption, it is a matter of concern. Having said that, I think I would say I'm cautiously optimistic. And I would certainly say that the worst is hopefully behind us.
Mr. Singhania, can you give us a little more specific color on by when do you see business coming back to pre-COVID level? What levels are you operating at right now compared to, say, January or February?
So I would say in our businesses, we are operating anything between 85% and 110%, depending on which business we are looking at. Having said that, I think the vaccine having come out, or at least being announced and starting to be administered, is a very big plus point. And the faster that goes, I think the faster we will recover to normalcy. My personal view is that if things come back to normal, there will be some vengeance spending, some return spending of higher numbers. And you're seeing it in terms of tourism. I mean, in March, I said that the minute one can go, one's going to take a car and go to Goa. And today, if you see Goa or you see holiday destination, hotels are completely full. International travel, where it is permitted, is completely full. So I think we're going to see a very strong bounce back. I'm optimistic, but like I said, I'm cautiously optimistic.
Right. That's very nice to know that you're already 80% plus, 85% plus in terms of operations. I want to understand from you, now that the festive season is over, what kind of visibility you have when you speak to your managers across the country? Are there inquiries coming in? And in the last couple of days, the visibility or different kind of commentaries coming from across the world on vaccine, you are in a consumer discretionary space. When there is visibility on that hope, are you seeing more people coming out visiting stores or making inquiries online?
So, I take traffic as a great indicator. And I think traffic in a city like Bombay is up to 95%. I used to travel to Thane in the COVID time. I was taking 40 minutes. Pre-COVID, I was taking 1 hour, 30 minutes. Today, I'm taking 1 hour, 20 minutes, 1 hour, 25 minutes. I would say traffic is about 95% back to normal. I think wedding season is strong. People who have to get married are getting married. And our dependence on the wedding season is strong. If you ask me to predict 6 months to 12 months, it's difficult to predict. I think we're predicting month on month and maybe at best Q1 next year, a calendar year. Like I said, I'm cautiously optimistic. Beyond that, I don't want to make any forecasts because we really don't know where the disruption is coming from time to time. Like I mentioned, the farmers' agitation is a disruption that eventually disrupts business.
Fair point. What about tier 2, tier 3, tier 4? In the last couple of years, for smaller store formats, you have actually gone deeper in terms of penetration and reach and distribution, and even in smaller towns, people are aspiration, and they are really climbing up the quality curve as far as their own spending habits are concerned. Raymond is one of the most brands everybody looks up to. What kind of feel do you have for smaller towns?
You see, I think I was talking to a few people, and they said in smaller towns, the people are behaving like there's no coronavirus, period. They're saying, what is coronavirus? So they are actually a lot on virtual normalcy, and then smaller towns are doing well. I mean, and I don't think you realize, I was talking to somebody in Australia today, and he said to me, he said that Australia has been COVID free for 46 days. So we are seeing these green shoots of countries which are getting COVID free. And I'm optimistic that a combination of that plus the vaccine will do very well in bringing back full recovery.
Sure. So let's move on. Our analysis shows that companies of all shapes and sizes across the country in the last quarter gone by have really, be it imposed due to the environment or willingly, have really kind of adopted a lot of cost-cutting measures, adopted a lot of improvement in efficiencies, all of that, and that has resulted in the numbers as well. Talk to us about your own experience at Raymond, stuff which you have done, and perhaps captured much more efficiency into the system, which may not only be during the COVID time, and it may sustain even in the coming quarters post-COVID.
Yes, I think this has been at some level, it's an eye-opener. I think every company has used this opportunity to ruthlessly look at their own costs and see how you can do business differently. For example, travel costs. Are travel required? I mean, today, pre-COVID, you would be sitting in my office doing an interview with me. Today, you're doing it at Zoom, and it's acceptable, and there's a much lower cost. Besides, it's a lot more efficient. So I think new ways are coming in to do things which are acceptable. For example, video conferencing has been there for years and years and years, but today I think every individual is using it, whether through a Zoom or whether through a video conference or a WhatsApp audio or a FaceTime audio. So the world has changed, and how much of the cost, supposing, I mean, I estimate, and this is my personal estimate, that if companies have cut 100 rupees of costs, I would say 30% of that cost might come back, but you'll still have, sort of killed 70% of the cost.
Fair point. So let's talk about one of the fears of the market. When I speak to analysts, some of them say that the way a large portion of the workforce has gone indoors and work from home, some of it may actually be permanent in nature, which may lead to some bit of demand destruction for some of the categories which companies like Raymond also operate in. Pure formal wear, both for women and men. Some amount of permanent damage is also likely, or demand may get deferred for a long time. Is that a legitimate fear? Are you also forecasting some shrinking of formal wear demand? What are your thoughts on this point?
See, whilst the formal wear demand you're looking at shrinking, people have to wear clothes. So Raymond as a brand is all encompassing and can easily go into athleisure or some of the casual wear brands. Having said that, I don't for one second believe there may be a small percentage of people that might never come out and work from home, but I genuinely believe people are waiting to get out. And you can see it by the people on the streets. Life is about experiences. It's not sitting in front of an iPad and doing a Zoom call. And, a lot of India and a lot of the world wants to get back to a normal and start to experience life. And as long as you want to experience life, you're not going to sit at home.
Right, that's right. I would have loved to have this interview like I always do, either from your office in South Bombay, home, or even in Thane. It's unfortunate we are having a chat like that. Sir, tell us, how is your real estate venture taking off? Response to that, because the data seem to be suggesting that Mumbai realty registrations have shot up to 8-year high. So some of your peers are seeing good sales offtake. You're also offered a very good product there in Thane. How are things shaping there?
So, having said that, I think Thana for us is doing very well. We're in the right sweet spot. We have the best product, the best location, the best price. Uh, and you've had 6 months of no sales. So, people, there is a demand. Somebody who wanted to buy a house in, say, April, May, June, July is all coming now to buy. For us, fortunately, because we are in the right sweet spot for the product, and also, Raymond has a delivery reputation, a corporate reputation. We've seen very good traction, and I'm enthused by our traction that we are seeing. So, having said that, there is solid demand for real estate currently.
Right. How's the FMCG business shaping up, or even your garment and textile side of the business?
I think it's all picking up. Like I said, our different businesses are anything between 85, 90%, and 110%, depending on which business we're looking at. And things are opening up. The faster things open up, the faster I think we'll be back to normalcy.
Right. Right. All right, Mr. Singhania, we'll let you go on that one. Thanks so much for joining us today and
Thank
giving
you
us
very much.
your color
Thanks, man.
and
Thank
your view on how things are shaping up at business.
thank you
Thank you,
very
sir.
much.
Have a great evening ahead. Bye bye.